We have now Blackstone with us because the global investment firm backed Nexus Select Trust is set to launch India's first retail REIT public offer on May 9th. The company plans to raise 3,200 crore rupees, which is a mix of fresh issue and offer for sale as well. Ashish Mohta, the Senior Managing Director, Blackstone, is joining us now to discuss this issue and Blackstone's plans when it comes to real estate investment in the country is concerned as well. Ashish, good afternoon. Thank you so much for joining us on CNBC TV 18. Well, first up, I wanted to understand about Nexus Select Trust itself. The IPO is opening on 9th May. What is Blackstone's contribution here? How much stake do you hold? And in the offer for sale that is planned, will you be paring down some stake here?
So good afternoon. Yes, on Nexus Select Trust, we currently hold about 60%, and post-IPO will continue to hold about 43%. So we are selling 16% down in the offer for sale, largely because the company continues to be very lowly levered. We will be only about 15% LTV, post-listing. And that's the reason why, we will pare down a little bit in the IPO. Like I said, we still continue to believe the long-term fundamentals of the business and will be owning 43% going forward.
Ashish, I believe initially you were looking at a 4,000 crore IPO size and then you brought it down to 3,200 crores. Is that correct?
We had initially contemplated about a 4,000 crore sizing, but just because of the pricing, dividend yields, etc., we've decided to sell lesser today. We want to try and hold it for the longer term. As I mentioned, we continue to believe the long-term prospects of retail assets in the country. Want to try and grow this portfolio pretty aggressively over the course of the next 3 to 5 years, and that's why we sort of wanted to hold more going forward.
Okay. I also wanted to understand, since it's India's first retail REIT, how does it differentiate from the commercial or the office REIT? Because when it comes to dividends, we have 3 listed REITs already. You back 2 of them. How would it differ in terms of dividend payout to unit holders? Is it better? Does the income statement look different from how we look at the commercial segment?
Yeah, so if you look at where office REITs are trading today, they're trading at about 6 to 7%. Distribution yields. We are pricing this at about an 8.25% distribution yield. So that's really just on the distribution side. If you look at the income statement, again, very different from the office side. Not only do you have the fixed contracts and the fixed escalations on these contracts, but you also participate in the sales upside. So you have the fixed contracts and the escalations, but you also participate. As we've seen sort of sales growth, we've participated in the sales growth numbers as well for all of our tenants. If you look at the basket of tenants that we have, almost 90% of our tenants give us a share of their revenue. So that's something that adds to the growth, in the sector as well, different from office.
You have 17 assets, high grade. 17 assets. But I think in India, I was reading somewhere, there are about 100 retail assets. Can you tell us your growth plans?
Yeah, so look, we started acquiring assets in 2016. Over the course of the last 6 years, I've added 17 malls. I do think over the course of the next 4 or 5 years, we can essentially double this portfolio. I do think the REIT as well, acts as a pretty attractive acquisition vehicle. When both in terms of being able to sort of pay for assets in cash as well as in units, and as you know, when you sell or essentially swap shares for units of the REIT, you essentially just defer tax from a seller's perspective. So I think the REIT's a pretty interesting or an attractive vehicle for many sellers to sort of participate in the growth story. Also, from a professional management perspective, we built Nexus into really the best management platform across the country. So from a standalone mall owner's perspective, really gets the benefit of diversifying his portfolio and getting it managed by a world-class team here.
Okay. Ashish, I'm speaking to you at a time when we are talking about this global slowdown chatter that's been going on, and there has been an impact of interest rate hike on commercial assets as well. I was reading this report which also suggested that Blackstone globally has limited the retail real estate fund withdrawals. That is because of 6th consecutive month of redemptions. Can you give us a sense of what's happening in India? Because you are being very bullish on the commercial space, but globally there has been an impact, and that's a point of concern as well.
So firstly, I think the one that you're talking about, is BREIT, and we didn't sort of, stop any redemptions, on that platform. This was really as per our contract. We had fixed redemptions really because of the kind of assets that we actually buy. These are long-term assets that we acquire, and we want to buy them in a structure where we aren't forced sellers at any point in time to realize the maximum value for an investor. So, we basically just stuck to the contract that we had on the specific instance that you're referring to. India, just moving along is very, very different. Retail, in fact, in India is one of the few places in the world that we actually like retail. And that's basically because it's really underpenetrated. Today, if you look at organized retail in the country, malls as well as e-commerce constitute only about 10 or 11% of the total retail pie. And therefore, there is a lot of headroom for both malls and e-commerce to sort of keep eating into the unorganized sector. So that's one. Secondly, if you look at the number of malls that you mentioned, there are like literally 100 malls in the country. And if you look at entertainment options, really a lot of options are now being created in malls. So whether it's retail, F&B, movies, futsal courts are now being set up on terraces of these malls, just as entertainment formats. So really, these are family destinations, really social infrastructure.
Right.
For many of our consumers.
Ashish, very quickly, your dividend yield is going to be about 8.5%. Under what circumstances will you not be able to honor this committed yield?
Look, it's 8.25%. First year averages about 9% over the first 3 years. What it involves, I think we've been pretty conservative in terms of our sales growth. If you look at what we've sort of grown in the past, we've grown at about 11% pre-COVID. Last year, we grew at about 30%. In our projections, we think we've basically projected only 8.5% growth rate. So we've been really reasonably conservative in our projections. But what could go wrong? I think, obviously a black swan event, something like COVID, does disrupt many operating businesses. And I think that's something that could potentially impact numbers. But I do think our business model is pretty robust. It gives you downside protection, very similar to office businesses, but also gives you the ability to participate in the upside.
Okay. All right. Ashish, it was a pleasure speaking with you. Thank you so much for joining us and explaining to us the contours of this new REIT IPO that's coming through and the general update on the commercial real estate market as well.